The real estate market in Arizona is in crisis. But here's the truth that few have realized. It is precisely in crises that the biggest opportunities to realize dreams and multiply investments are born. While the majority flees in fear, a select group of common people and investors are doing exactly the opposite. They are buying. And we don't speak from guesswork, but with data from the Common Sense Institute and Arizona State University. Prices fell up to 9.4% in Phoenix, but Arizona faces a structural deficit of 121,334 housing units that needs to be filled. This means that when the market recovers, and it will recover, prices will explode. The history of the American real estate market proves those who buy in the crisis sell in the boom. If you want to discover where to buy properties with up to 25% discount before the recovery, based on deep analyses and verifiable data, subscribe now and activate the bell. Our agent in the field will reveal the 10 biggest investment opportunities that few are seeing in Arizona right now.
The Arizona real estate market is undergoing a historic correction, and this has created something rare, a window of opportunity for investors who understand market cycles. While prices have fallen between 6.9% and 25% depending on the region, history shows us that corrections like this always precede periods of strong appreciation. Let's get to the facts. Arizona still has a housing deficit of 52,846 units, according to data from the second quarter of 2025, and cumulatively the state needs 121,334 units to meet the real demand. This means one thing: when the market recovers, and it will recover, pent-up demand will explode, and prices will rise quickly. Mortgage rates are at 6.72%, having fallen slightly from 6.82% at the beginning of the year, and the trend is for a gradual decline in the coming years. For those who buy now with prices 15% to 25% below the peak, and later refinance when rates fall to 5% or less, the return on investment can be extraordinary. The question is not if Arizona will recover, but when. And the demographic data is clear. Migration to Arizona continues, especially from Californians and residents of high-tax states. Between 2019 and 2022, prices rose 80% in Phoenix precisely because of this structural demand. This demand has not disappeared. It is just waiting for the right conditions to return. Today we're going to reveal the 10 cities in Arizona where prices are in free fall and where smart investors are positioning capital for the next 3 to 5 years. You will see the numbers of the fall, but more importantly, you will understand the appreciation potential based on real data on infrastructure, population growth, and economic development. Number 10. Prescott. Prescott saw its prices plummet from $650,000 to $530,000, a drop of approximately $120,000, which represents 18.5% discount in less than 2 years. Projections indicate another 10% to 15% drop by the end of 2026. For most people, this sounds like an alarm. For experienced investors, it sounds like an opportunity. Here is what the numbers do not show. Prescott has one of the lowest crime rates in Arizona, consolidated tourism infrastructure, and a privileged location just 90 minutes from Phoenix. The city attracts consistently high-income retirees who seek a mild climate and superior quality of life. The current drop is driven by 3 temporary factors: increase in home insurance, increase in mortgage rates, and excess supply due to accelerated construction during the boom. All these factors are cyclical and reversible. When interest rates fall and the excess inventory is absorbed, Prescott will become premium again. Consider this. Buyers paying in cash now are getting 25% discounts on properties that cost $650,000. If you buy for $487,500 with a 25% discount, and the market returns to 2023 levels in 4 years, you will have a gain of $162,500 just in appreciation, without counting rental income. Prescott also benefits from something crucial: scarcity of developable land. Surrounded by national forests, the city has natural expansion limitations, which historically sustains real estate values in the long term. When demand returns, there will not be infinite supply to compete. For investors focused on short-term rentals, Prescott maintains strong tourist appeal. The Chino Valley and Prescott Valley areas, which are semi-empty now, offer new properties with massive discounts perfect for Airbnb when tourism fully recovers. Number 9. Gilbert. The premium suburb on sale. Gilbert was the symbol of suburban prosperity, with prices that exploded 70% between 2020 and 2022, reaching $640,000. Today, the median price has fallen to $520,000, a 19% reduction that represents a $120,000 discount. Houses that generated bidding wars in 2021 now sit months on the market with sellers cutting $80,000 or more just to attract offers. But here is the complete story. Gilbert continues to be one of the cities with the best educational infrastructure in Arizona, has an extremely low crime rate, and is strategically located in the east corridor of Phoenix, close to major employment centers. Gilbert's economy is diversified, with a strong presence in the health, education, and construction sectors. Despite the current squeeze, the city maintains solid fundamentals. The median household income is still above $100,000, which means real purchasing power when credit conditions improve. What makes Gilbert especially attractive now is its proven track record of economic resilience. The city was ranked as the #1 mid-sized city in the United States for economic growth, with more than $2.3 billion in new capital investments and 23,000 new jobs created and retained since 2014. This type of economic foundation does not disappear during temporary market corrections. Gilbert is also investing heavily in diversified economic development. The Rivulon project, a $1 billion mixed-use development located along Gilbert Road and Loop 202, is transforming the city into an innovation and technology hub. Projects of this magnitude attract companies, high-skilled talent, and inevitably, renewed housing demand. For investors, the math is clear. A house bought for $520,000 today, when prices return to 2022 levels in 3 to 4 years, will be worth $640,000, a gain of $120,000 or 23% return just on appreciation. Add rental income during this period, and you have a solid investment with multiple sources of return. Gilbert's educational infrastructure, with schools consistently ranked among the best in Arizona, ensures that young families will always see the city as a priority destination. When mortgage rates fall to 5% or less in the coming years, the pent-up demand from families who are waiting to buy will explode. Number 8. Goodyear. Goodyear saw its prices fall from $580,000 to $470,000, a devastating 19% reduction that scares conventional buyers. But investors who understand urban development are paying attention to something completely different: the massive infrastructure projects that are transforming Goodyear into the new epicenter of the West Valley. In May 2025, GTI Energy announced an initial investment of $33 million, with plans to add another $20 million to open a 530,000 square foot manufacturing facility at Laken Park in Goodyear. This is exactly the type of industrial development that creates high-quality jobs and drives long-term housing demand. But the real highlight is the Goodyear Ballpark Village, a mixed-use development project on 58 acres of land around the Goodyear Ballpark, which serves as the spring training home for the Cleveland Guardians and Cincinnati Reds. The city is actively seeking master developers to create a premium retail, dining, and entertainment destination. When complete, this project will completely transform the appeal and real estate value of the surrounding area. Furthermore, the GSQ development has already attracted Goodyear's first Trader Joe's, Black Rock Coffee, and Firebirds, signaling that major national brands are betting on the city's long-term growth. The famous Buc-ee's is also scheduled to open by Christmas 2025, bringing 200 full-time jobs and a 74,000 square foot facility with 120 fuel pumps. These are not speculative projects. They are confirmed and funded investments that are already under construction. For real estate investors, this means one thing: demand will return strongly when construction is completed and jobs start to flow. Goodyear's strategic location also cannot be ignored. Positioned in the growth corridor of the West Valley with direct access to I-10, the city is perfectly situated to absorb the continuous expansion of Phoenix. With prices 19% below the peak, investors are buying properties close to these billion-dollar developments for a fraction of what they will be worth in 3 to 5 years. Number 7. Surprise. Surprise presents a fascinating scenario for investors. The current median price is $431,717, with only a 0.5% increase compared to 2024, but the average price of $435,090 shows a 2.5% year-over-year drop. This stabilization after the 2023-2024 correction creates a solid foundation for future growth. What makes Surprise especially interesting now are the market numbers. Approximately 60% of homes are selling below the asking price, creating enormous negotiating power for buyers. Homes are taking an average of 66 days to sell, compared to 59 days the previous year, another sign that buyers have the advantage. But here is the hidden opportunity. Inventory is steadily increasing due to the combination of resales and continuous development of new communities like Sterling Grove, Rancho Mercado, and Cascades at Prescott. Builders are offering massive buyer incentives, including credits for closing costs, rate buydowns, and upgrades to offset high interest rates. For investors, this means you can negotiate significant discounts and receive builder incentives, essentially buying new properties at a double discount. Once mortgage rates fall into the 5 to 6% range, projected to happen gradually over the next few years, these same properties will see renewed demand without the incentives, automatically increasing their market value. Experts predict that prices in Surprise will remain relatively stable through the end of 2025, with fluctuations of only plus to 1% to 3%, depending on property type and location. This stability is ideal for investors who want to enter the market without the risk of significant continuous drops. Surprise's growth is also being driven by new retail and restaurant developments in the West Valley, including significant projects in Buckeye, Surprise, and Goodyear that are bringing new shopping, dining, and even affordable rental housing options. The $350,000 to $450,000 price range remains competitive, especially for desirable single-story floor plans, showing that even in a buyer's market, certain properties maintain solid demand. For investors focused on residential rentals, this indicates a robust tenant market that can generate consistent income while you wait for appreciation. Number 6. Casa Grande. Casa Grande represents possibly the biggest undervalued investment opportunity in Arizona right now. Prices have fallen consistently during 2024 and 2025, creating significant discounts for investors. But while conventional buyers see only decline, industrial investors are seeing something completely different. A massive economic transformation that will completely redefine this city. Casa Grande was the 7th fastest growing city in the United States in 2021. With an impressive population increase of 24% since 2016. The current population is approaching 80,000 inhabitants, but projections indicate it will surpass 120,000 by 2040, a 50% growth that will create explosive housing demand. What is driving this growth? Billion-dollar industrial investments that are already confirmed and under construction. Lucid Motors recently expanded its manufacturing complex to 4 million square feet, with plans for additional land acquisition to support future growth. LG Energy Solution is building a $5.5 billion battery manufacturing complex, with the first factory scheduled for completion in late 2025. Kohler just opened a new manufacturing facility, adding more quality jobs. These 3 companies alone will collectively bring more than 6,400 jobs to the area. This type of industrial development creates a ripple effect. High-quality jobs generate demand for housing, retail, services, and infrastructure, multiplying the real estate value of the entire region. And the story gets even better. Arizona Land Consulting recently acquired more than 600 acres for a $40 million mixed-use project that will incorporate commercial retail, rental housing, light industry, and data centers. Exactly the type of integrated development that creates vibrant communities and consistent appreciation. In the retail sector, Target is scheduled to reopen at the Promenade at Casa Grande, the region's main power center, bringing traffic from surrounding areas. Vacant locations adjacent to the Promenade will certainly attract more national retailers. Retail vacancy in Casa Grande has fallen dramatically from a peak of 20.2% in 2020 to just 11.7% currently, signaling a full post-pandemic recovery. In 2024, Casa Grande completed more than 6,000 infrastructure repairs, expanded turn lanes, finalized the $5.8 million Trekell Road project, and invested $8.7 million in sewer expansion. The city also added more than 1,100 new residential units and saw $441 million in construction projects. This scale of public and private investment does not happen in declining cities. It happens in cities experiencing explosive growth. Casa Grande's strategic location, less than 50 miles south of Phoenix Sky Harbor International Airport, positions the city perfectly to capitalize on Phoenix's metropolitan expansion. With direct access to I-10, Casa Grande serves as an ideal logistics hub for distribution and manufacturing. For investors, the math is simple. Casa Grande is experiencing a billion-dollar industrial transformation, 50% population growth projected by 2040, and massive infrastructure investments, all while real estate prices are temporarily suppressed. This is the definition of an unbalanced opportunity. Number 5. Maricopa. Maricopa presents a fascinating scenario for astute investors. The average home value is $351,580, a drop of 4.0% over the last year. Median prices are at $341,000, representing a 4.4% drop compared to the previous year. Homes are selling on average after 91 days on the market in September 2025, indicating a buyer's market where negotiations are possible. Maricopa is currently classified as a balanced market as of August 2025, which means that the supply and demand for homes are approximately equal, with median days on market of 67 days. This balance is ideal for investors because it eliminates extreme volatility while still offering discounts from the peak. Here is the long-term perspective that matters. Despite prices having fallen more than 9% since the 2022 peak, they are still 43% above the levels of early 2020 when the pandemic outbreak began. This represents approximately 8% return per year, which is exactly in line with the average historical annualized returns over 10 years. This statistic reveals something crucial. The Maricopa market is not in structural collapse. It is simply correcting from an unsustainable peak back to a normal and healthy growth trajectory. For long-term investors, this is exactly the type of correction that creates ideal entry points. Experts warn that prices in Maricopa could fall a bit more because demand is still low and inventory is increasing. But here is the critical point. High mortgage rates are holding buyers back. When rates fall, and experts project gradual declines in the coming years, demand could skyrocket quickly, and with it, prices will also rise. Recent population data shows that Grande recently surpassed Maricopa in population growth rate for the first time in several years, with both Pinal County cities dominating Arizona's growth rankings. This regional growth creates a network effect, where the entire Pinal County region benefits from shared infrastructure, commercial development, and economic momentum. For investors focused on rental income, Maricopa offers significant advantages. The proximity to Phoenix, approximately 35 miles south, attracts tenants who work in the metropolitan area but seek lower housing costs. With rents remaining relatively stable while purchase prices have fallen, rental yields have improved substantially. The winning strategy in Maricopa is clear. Buy now during the temporary correction, generate rental income while holding, and then refinance or sell when interest rates fall and demand returns. With discounts of 4% to 9% from the peak and solid demographic fundamentals, Maricopa offers an attractive risk-return profile for patient investors. Number 4. Tucson. Tucson is undergoing a quiet but profound economic transformation that few real estate investors have noticed yet. Tucson's population is expected to increase 0.8% in 2025, driven by positive net migration. Job growth is projected at approximately 1% annually, which, although slower than the state average, still surpasses national rates. The real catalyst for Tucson is in the strategic industrial clusters that the city is aggressively developing. Tucson is investing heavily in aerospace technology, defense, advanced manufacturing, and biotech sectors, industries that pay well above average salaries and attract highly skilled workers. The city is also leveraging strategic state lands for future development, creating industrial corridors that will generate jobs and wealth for decades. In October 2025, the Southern Arizona Chamber of Commerce officially endorsed Plan Tucson 2025, Proposition 417, a comprehensive roadmap for growth, housing, and resilience that will shape the city's development for the next 10 years. The plan focuses on sustainable growth, affordable housing development, and infrastructure investments, exactly the type of long-term planning that creates consistent real estate appreciation. Residential construction in Tucson increased an impressive 25% recently, although projections indicate minimal growth next year, creating a balance between supply and demand. This balance is ideal for investors because it eliminates the risk of overbuilding while keeping prices stable. For investors, Tucson offers a unique proposition. Prices significantly lower than Phoenix, about 40% discount. Structural economic growth driven by industrial clusters, approval of a long-term development plan, and proximity to the Mexican border, which facilitates trade and logistics. When the market fully realizes Tucson's potential, prices will adjust quickly upward. Number 3. Flagstaff. Flagstaff presents one of the most interesting and counterintuitive opportunities in Arizona. In May 2025, the median sale price was $580,000, representing a 3.5% increase over 2024. In June, 116 homes were sold, marking a 21% year-over-year increase. In August 2025, the median listing price was around $835,000, with a median sale price close to $748,250. These numbers may seem confusing at first glance. Some show growth while others indicate a challenging market. The reality is that Flagstaff is transitioning from a seller's market to a more balanced market, with active inventory increasing 18%. Properties are taking longer to sell, creating negotiation opportunities that didn't exist 2 years ago. Here is the hidden opportunity. Flagstaff has a structural scarcity of developable land. Surrounded by national forests and protected federal lands, the city simply cannot expand infinitely. This geographical limitation creates guaranteed long-term appreciation because supply can never dramatically outpace demand. Flagstaff's rental market is exceptionally strong, driven by Northern Arizona University and a flourishing tourism industry. Neighborhoods like downtown Flagstaff and University Heights generate significant rental demand, creating a conducive environment for investments in rental properties with lucrative returns. The short-term rental market, Airbnb, VRBO, is particularly robust due to year-round tourism, skiing in winter, hiking in summer. Flagstaff's population is approximately 75,000 inhabitants and is growing steadily, attracting residents seeking an outdoor lifestyle and a more affordable cost of living compared to other major cities in Arizona. The local economy is diversified, supported by education, tourism, government, and research, a mix that creates economic stability during market cycles. The year 2025 is solidifying as the perfect year to invest in Flagstaff rentals. With growing tourism, economic expansion, and an increase in demand for rental properties, investors who buy now during the market transition will benefit enormously when demand fully returns. Neighborhoods like Kachina Village offer a natural setting and accessibility, while Pine Canyon exemplifies luxury living with its gated community and golf course amenities. Dunny Park attracts with rural charm and stunning views, and downtown Flagstaff offers historical appeal with an active cultural scene. This diversity of neighborhoods creates investment opportunities at all price points. Number 2. Chandler. Chandler is the fourth fastest growing city in Arizona, with a population of 275,987 inhabitants, according to the 2020 census. The city experienced 15% growth from 2010 to 2020. Adding an impressive 35,224 new residents in a decade. Chandler was nationally recognized as the best place to find a job in America. Here is what makes Chandler absolutely irresistible to investors. Intel alone employs 12,000 people locally. This type of corporate anchor creates massive economic stability and consistent housing demand. Intel is not leaving. In fact, with the billion-dollar investments in semiconductors in the United States, Chandler is positioned for additional explosive growth. Projections for 2025-2030 are exceptionally optimistic. Business expansions include companies like Comtech, relocating its headquarters to Chandler, continued investment in infrastructure to support population growth, expansion of the technology sector, with semiconductor manufacturing and technology, and sustainable development that maintains quality of life are all confirmed. Arizona, as a state, broke records in economic development in fiscal year 2025. With companies committing to create a projected 24,185 new jobs, with an average salary of $95,128, both representing record results. Companies also committed to investing more than $31 billion in local communities. Chandler is capturing a significant portion of these investments due to its established technological infrastructure. The Phoenix metropolitan area experienced impressive growth in infrastructure, with a 25.8% increase in highway miles over a 5-year period, facilitating development and connectivity. Chandler benefits directly from these regional investments. For real estate investors, Chandler offers a rare combination: accelerated population growth, a high-quality job base with high salaries, established infrastructure, and sophisticated urban planning. Prices fell during the 2024-2025 correction, but the economic fundamentals remain rock solid. When mortgage rates fall and demand returns, Chandler will be one of the first cities to see an aggressive price recovery. The city also maintains excellent public schools ranked among the best in the state, low crime, and superior quality of life, all factors that ensure long-term housing demand from high-income young families. Investors buying now during the window of opportunity will capture appreciation when these families return to the market. Number 1. Phoenix. Phoenix is the #1 city where smart investors are buying aggressively during the price collapse, and the data explains exactly why. Median home prices in Phoenix fell from $455,000 at the 2022 peak to approximately $430,000 in 2025, a 5.5% reduction that created an entry window for investors. But here's the crucial context that transforms this drop into a massive opportunity. Phoenix is the 5th largest city in the United States, with a metropolitan population exceeding 5 million inhabitants. The region experienced explosive population growth of more than 80% between 2000 and 2022, driven by migration from high-tax states, favorable climate, and a relatively affordable cost of living. Phoenix led the nation in population growth during the pandemic, with more than 170,000 new residents arriving between 2020, and this massive migration created unprecedented housing demand that pushed prices to unsustainable levels. The current correction is simply returning prices to a sustainable trajectory. Phoenix's job market remains robust with growing diversification beyond the traditional construction and tourism sectors. The region is attracting technology companies, advanced manufacturing, logistics, and data centers, all sectors that pay high salaries and create quality housing demand. Arizona as a state committed $31 billion in new corporate investments in 2025, with Phoenix capturing the largest share. Phoenix's infrastructure is expanding rapidly to keep up with growth. Expansions of the Valley Metro Transit System, highway investments, and the development of smart city initiatives are all underway, increasing connectivity and the value of properties along transport corridors. Here is the investment math. A house bought for $430,000 today, when prices return to 2022 levels in 3 to 4 years, will be worth $455,000, a gain of $25,000 just in appreciation. But if you consider that prices historically grow 6 to 8% per year in Phoenix during expansion periods, and the market is entering a recovery cycle after a correction, the real potential is much higher. Phoenix also offers a diversity of investment opportunities impossible to find in smaller cities. From urban condos downtown to suburban homes in Ahwatukee, luxury properties in Arcadia to rental investments in emerging areas like South Phoenix, there are strategies for every investor profile. The inventory of homes in Phoenix increased 32% year over year, creating massive negotiating power for buyers. Sellers are accepting offers 5 to 10% below the asking price regularly, and properties that cost $500,000 in 2022 are now available for $430,000, $450,000. This discount window will not last forever. Builders are offering unprecedented incentives: 3 to 6 months of free mortgage payments, $30,000 or $50,000 in included upgrades, and subsidized interest rates. Investors buying new construction are essentially receiving a double discount: reduced price plus massive incentives. The recovery of the Phoenix market is inevitable for one simple reason: structural housing deficit. Arizona needs more than 120,000 housing units to meet real demand. When interest rates fall to 5 to 6% in the coming years, this pent-up demand will explode instantly, and there will not be enough supply to meet it. Real estate market cycles are predictable: expansion, peak, correction, recovery. Phoenix is clearly in the advanced correction phase, about to enter recovery. Investors who buy at the bottom of the correction capture all the upside of the recovery. You have just seen the 10 cities in Arizona where prices are in free fall and where smart investors are positioning capital to multiply their wealth in the coming years. While the traditional media shouts crisis, the data reveals the truth. This is the biggest opportunity to buy real estate in Arizona since the 2012-2013 recovery, which created millionaires in less than 5 years. History doesn't repeat itself, but it rhymes. And now it is rhyming loudly. The only question is, will you be one of those who buy when prices are low and sell when they are high? Or will you wait until everyone realizes the opportunity and prices have already skyrocketed again? The time to act is now. Mortgage rates will fall. The housing deficit will force prices up. The billion-dollar investments in infrastructure and industry will create jobs and demand. And when all this converges in the next 2 to 3 years, people will look back and say, I should have bought in 2025 when I had the chance. Don't be that person. Share this video with anyone you know who is thinking about investing in Arizona. Subscribe to the channel and activate the bell to receive exclusive updates on the real estate market. And if you are serious about building wealth through real estate, leave in the comments which of these 10 cities caught your attention the most. Our team reads all the comments and might make an in-depth video about the city you choose. The future belongs to those who act while others hesitate. Phoenix, Chandler, Flagstaff, Tucson, Kasa, Grande. These are not cities in collapse. They are golden opportunities waiting for investors brave enough to see beyond the fear. See you in the next video, and until then, keep investing intelligently.